Yo guys, welcome to another video. I hope you guys got some value from the content that I produced for you in the last video talking about Fibonacci, and I really got so excited because of the feedback that you guys gave me in the comment section down below. You guys subscribed to the channel, you liked the video, and one particular subscriber putting the comment right here asked me to go into detail on how to really go about the entries on this Fibonacci strategy that I showed you guys in the previous video. So in this video, it's just a follow-up video to show you guys exactly how you can make entries using that Fibonacci trading strategy, and I hope you guys will take value from this video. Remember to give a like on the video, subscribe to the channel, and also drop your comments down below. It really excites me to read through your comments, and I really react to them, guys. So without wasting any more of your time, I would like to take you guys onto the charts, and we're going to go through the Fibonacci trading strategy that I had earlier on brought to you guys in the previous video. So let's go over to the charts and let's dive right into it. So right here we are on the charts. We are on the GBP JPY chart, and I want you guys to notice that as we are trading Fibonacci, we draw these Fibonacci zones or Fibonacci retracements on a higher time frame, and then we could scale down to a lower time frame to get better entries. You can draw the Fibonacci on the weekly, daily, or 4-hour charts. Then you can scale down to the lower time frames to get better entries. So we are starting off with the daily chart at this moment. So one thing that most people don't understand about Fibonacci is that when you're drawing Fibonacci, you have to first of all look at where the market trend is going. Okay, so in this case, what you do, you zoom out the chart, and then you look at the chart here. Okay, you see that the chart GBP JPY is on an uptrend, as you can see here. It's on an uptrend. So what you're looking for is to look for the most recent significant low point, which would be this area here. So as I showed you in the previous video, what you want to do is you want to get the Fibonacci retracement tool, go to the lowest point on the chart here, and draw your retracement to the most recent highest point, which is up here. Okay, so after you have done that, what you want to do, guys, is you want to look for 3 major zones. You want to look at the 38 Fibonacci, the 50%, and the 61.8 Fibonacci. But I normally don't trade off of the 38. I just keep an eye on it, but I like to trade off of the 50% and 61.8 Fibonacci retracement zones. So I like to draw a golden zone, as I showed you guys in the previous video. If you've not watched that video, maybe you could go and watch that video. I may leave a link in the description down below, or I may put up a link here in the pop-up in the video. So you want to look for the 50% Fibonacci and the 61.8 Fibonacci, which is this area, and you want to draw a rectangle tool there. I like to color mine gold. You can color it in any color you want. Okay, so once you've drawn that, what you want to do, as I showed you guys in the previous video, you want to wait for price. You want to wait for price to come down to that area, and now when it comes to that area, you look for confirmations. In this video, I really wanted to show you guys what the subscriber that I mentioned earlier on had suggested, how to place entries using candlestick patterns, confirmation candlestick patterns. So these confirmation candlestick patterns could be a bullish engulfing, a bearish engulfing, 3 white soldiers, 3 black crows, evening star formation, or a morning star formation. So when you see the market at this area, what you want to look for is a bullish engulfing candle for you to jump into the market to go upwards. Okay, don't just enter because it has reached the golden zone. Wait for a candlestick pattern, or wait for a candlestick formation that confirms the bullish move. For example, if you see a bullish engulfing candle within this golden zone, or you see a morning star formation within this golden zone, or if you see a doji around this area, or you see a hammer, a bullish hammer appearing in this golden zone, then you could jump in on a buy and then target, probably you could target the 38 or 23, but 38 would be the first target, and then 23 Fibonacci would be your second target, and then maybe the third target would be the 0% area. But why you consider looking for candlestick formations or confirmation patterns for you to jump into the market, or for a buy or a sell after the trade has the market has reached the golden zone Fibonacci, is because sometimes it will reach the golden zone Fibonacci and then it will break below. Okay, it will break below, and when it breaks below, you don't just jump into a sell, guys. Remember, you have to wait for confirmation candlestick patterns for you to jump into a trade. So for example, if it breaks below this area, you don't jump into a sell until there is a retest of the golden zone. After the retest, you don't jump in on a sell still. You wait for a confirmation candlestick pattern, like a bearish engulfing candlestick forming after the retest, or you wait for something like an evening star formation around this area here after the retest. Okay, or you find that you may wait for, something like a harami bar. Okay, or you could wait for a marabuzu, a bearish marabuzu candle of this area here. Then you could short the market and target this low. Okay, so that is how you enter in on a trade after the golden zone Fibonacci has been tested. I hope this answers the question that was put forward by a subscriber, by one viewer who commented down below. So just wanted to take you guys through this. Now what I want to do at this moment is I want to go back on the chart and maybe back test a bit to show you how you could enter using those candlestick patterns that I have just mentioned in the video. Remember guys, leave a like on the video, comment down below if you don't understand anything. I'll be able to record a video to enlighten you or elaborate on that topic that you guys may be wanting more knowledge on. So on the chart here, we are going backwards. We'll just go backwards, guys. So we're going back on the chart here. We are looking for a place where we can I can show you guys a back test. Okay, so we can look at this area here. Okay, we can look at this area here. So here the market was going downwards. Okay, market was in a downtrend here in the daily chart. Okay, so what you would do at this point, remember guys, I told you that when you are trading Fibonacci, what you need to do is you look at the time frames and also determine where the market trend is. If the market is trending downwards, you want to draw your Fibonacci from the top level to the low level. Okay, so that's what we're going to do now. We're going to pick Fibonacci, and then we're going to look at this area here, draw it a Fibonacci from there to this lowest area. You have to be accurate while drawing Fibonacci. Okay, You have to be accurate. Make sure your points reach the right place. Okay, make sure they reach the right place. So after you've done this, look for the golden zone, which is the area between 50 and 61.8 Fibonacci, and draw your golden zone there. Okay, draw your golden zone there. You can move it to the future, or you can just draw it to where you want it to stop. Okay, because guys, remember that all this price action was not there. We're just drawing it from this retracement. This whole price action was not there. So what you want to do after you've drawn this your Fibonacci golden zone like that, what you want to do at this point is you want to wait for price. Okay, you want to wait for price to come to your golden zone. Now look at what price did here. Price drove from here and went up to the 50% Fibonacci, rejected it, but did not give us confirmation here to sell. And you see, the market went back up. Okay, did not give us an indication to sell still here. All right, here it gave us a bit of a morning star formation here. This is a morning star formation. You would have sold the market from here. Actually, you would have put a sell trade here. You'd put a short position after this. I don't know if I can zoom in and show you guys. Hold on. Let's just delete this. I wanted to zoom in that area so that you guys can see exactly what I mean. Okay, this here is a morning star formation. I mean an evening star formation. Forgive me guys. This is an evening star formation here. Okay, bullish candle, small bearish candle, and a bigger bearish candle. That's an evening star formation. So from there you would short the market. After this formation, place your short trade here. Stop loss just slightly above the golden zone, and target a 1 to 2 risk to reward ratio. Okay, just like that. So if you moved this forward, it would take some time, some days, okay, but it would eventually hit your take profit, okay, because of this confirmation. And actually when the market came in, let's go back here, when the market dropped down to some profits and it went back to test the golden zone again, it produced the 3 black crows. These 3 red candles or bearish candles are 3 black crows. Okay, this was a confirmation pattern for it to scale into this position. You would add another position here, and then you would hold these 2 positions, okay, until they reached take profit here. Hope you guys are following along, and I hope you guys are learning from this. There are so many confirmation patterns, chart patterns. I'll do a video about chart patterns, candlestick patterns, and candlestick formations that you guys can follow along with when you're trading Fibonacci. But at this point, you could see that this trade worked out very well. And also you can let's just delete, first remove all this and go and look for another area where we can test this Fibonacci trading strategy. Okay, let's see. Okay, so this is another area we'll test it from. Okay, because here the market was in an uptrend, market had reversed, it was going up. Okay, you guys can see that. First step, look at where the market direction is going, and then the second step is look for a place where market is retracing, like this area here. Market is retracing here. So what you do, get a Fibonacci, start from the lowest point, which is here. Okay, drop your Fibonacci here. Okay, and then draw it to this area here, there. Okay, so after you've done that, look for the area between 61.8 and 50 and put a golden zone there. Okay, draw a golden zone there. And then you guys, I want you to see the magic of this strategy. Okay, this one was clear as day. Market went up, retraced to the 50 golden zone between 50% and 61.8 Fibonacci, and then from this area it gave us a confirmation pattern by producing this bullish engulfing candle. This is a candlestick confirmation pattern to continue bullish. So this, you would put in a long position after the engulfing candle. Yeah, stop loss just right there, and then you would target a 1:2 risk to reward ratio, which would be achieved. Okay, guys, if you're liking this content, if you like what you're seeing in this video, give a like on this video and subscribe to the channel, and also drop your comments down below. It really goes a long way to support the channel. So guys, I don't know how many of these I can backtest for you guys, but you could see that this trading strategy, this Fibonacci retracement trading strategy using these candlestick confirmation patterns, can really go a long way to help you guys become successful forex traders and also become profitable in your forex journey. So I don't know how many of these you guys would like me to backtest to prove that this strategy works, but let's just do one more and then I'll wrap up the video, because I don't want to make the video too long. Guys. So we could also look at this this area here. If you want to, you could see if that would work out here. Draw Fibonacci from here and draw it to this area here. Okay, because that was where the retracement was. And if you draw your golden zone, which is this area here, okay, you would see that market did not come to the golden zone from here, so you didn't take that trade. Remember, if you don't get the market to your golden zone, don't take the trade. Let that trade pass. In this strategy, you only trade the market when it has come to your golden zone Fibonacci retracement area. You don't trade the market while it is away from the golden zone. You wait for the market to come to the golden zone, give you a candlestick confirmation pattern, bullish engulfing, bearish engulfing, candlestick patterns, a marabozu, a bearish marabozu, bullish marabozu, a hammer, you know those candlesticks, guys. I'll make a video about candlestick formations that will help you guys understand those candlesticks, but in this video just wanted to show you how to trade Fibonacci with these candlestick patterns. And remember, when the market comes to an area like this, that is when you trade. If it doesn't make a retracement that comes to the 23 or 38, you don't take that trade, guys. Okay, don't take that trade. You can look for these areas. Let's see if we can get one more. You can trade this even within trends. Like here, the trend is going up. From here, you could draw a Fibonacci retracement from here and draw it upwards to here, to this area here. Okay, now you can see that market did not reach your Fibonacci golden zone here, which is this area here. Market didn't reach there. You could leave this Fibonacci on. Market didn't reach here, went up, came back, but did not reach the 50% Fibonacci. You didn't trade that market. You waited for market. You left your Fibonacci and golden zone there, and when the market came back here and reached the golden zone. Now you zoom in. Let's zoom in and we see if there's any confirmation pattern candlestick there. When the market came down here, you can see that it gave us a bullish engulfing here, which was a confirmation for us to go long. You'd put your long position here, your stop loss just right there, and then you target a 1 to 2 risk to reward, which you would get quite easily, guys. You'd achieve your 1 to 2 quite easily. So always trade the market when it comes to the golden zone. Don't trade it when it is away from the golden zone, like for example this area here or this area here. Don't trade the market there. Wait for the market at the golden zone. And you can see that the market went up, came back down to the golden zone, went and broke below the golden zone, but did not give us a confirmation pattern to go bearish. Okay, the market came, drove down here like this, okay, broke below, okay, went back up to test but broke above again. All right, did not give us a confirmation pattern after breaking above. We waited for it to retest the golden zone to go long. It came to test the golden zone but went again below, played around here, okay, and now at this area here it gave us what you guys see here as a morning star formation. You see here there's a morning star formation for us to go long. Don't know if you guys can see the morning star formation. Don't know if you guys can see the morning star formation. Let me zoom in a bit more. Okay, you see this is a big bearish candle, and then there's a hammer here, okay, a hammer, and then there's a bullish engulfing. This is a morning star formation, which gives us confirmation for market to go up from the golden zone. So you'd put your long position here after this candle here. You would put your stop loss just below the golden zone, okay, just below the golden zone, right? And then you would target maybe, let's see, did we get a 1 to 2? We barely missed a 1 to 2, but still the market went and gave us that profit, guys. So after that, guys, you see that the market did come back down. The market came back down to the golden zone, okay, and then it tried to give us another movement upwards, but was rejected with a evening star formation here. You guys can see that this is an evening star formation, okay. Then the market created also another confirmation pattern, which is a 3 black cross, okay, 3 black cross, also a chart pattern. You could then take a short position after the 3rd crow here below the golden zone, stop loss just above the golden zone, and then target 1 to 2, which was achieved right there. So guys, I cannot make this video any longer than this. Hope you guys enjoyed the video. Hope you take some value from this video. Try to practice this strategy and surely you guys will become profitable by it. Remember, leave a like on the video, subscribe to the channel, and also comment down below with your thoughts. And now, I don't want to take any more of your time. I'd like to say thank you for watching the video. Until next time, bye-bye.